Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, May 27th. It's Alissa Coram here, and strong gains across the board for the major indexes with some relief on fresh tariff news over the weekend and end of last week. So that definitely helped fuel gains as we saw a test at a key level on Friday. And joining me now to discuss all of the market action we need to know is my colleague, Ed Carson. Ed, what do you have for us today?
Yeah, I want to take a look at Nvidia, On Holding, and Brinker International.
Okay, we'll take a look at those stocks. Nvidia, of course, with earnings right around the corner. All eyes will be watching. So we'll look at those stocks. But first, let's take a closer look at those major indexes today. The NASDAQ up some 2.5%, Ed, by session's close. The S&P 500 with a gain of a little more than 2% on the day. The Dow is up 1.8% in today's session, and the Russell 2000 up about 2.3% or so, headed into the final stretch of the day. So we've seen a little bit of a shift, Ed, from negative market reactions related to all things tariffs to knee jerk reactions to all things tariffs to now pretty positive reactions to tariff related headlines. What do you make of what we saw today?
Yeah, really positive action. The Nasdaq has almost recouped all of its losses from last week, and now we weren't sure it was last week constructive or not. I mean, there was some ugly action on a day-to-day basis or intraday, but ultimately that sort of was like a positive test, especially for the S&P, which we'll get to. But this is almost right back to highs. There are a lot of handles formed. We have a lot of bases that have stocks that look like this, honestly. I mean, some lower, some higher, but it's what turned out to be constructive. We definitely saw a lot of breakouts or stocks flashing buy signals today. So really positive session. I mean, absolutely. I mean, obviously we have Nvidia. We'll talk about that,
Yeah.
but there's always another test. But this looks like the market is handling what looked like tests last week really positively.
And this is exactly what we want in a power trend market, right? I mean, it wasn't ideal, I guess, for the pullback to happen immediately after we got all those power trend signals. But at the very least, what a power trend does allow you to do when you are seeing this trending market with the 21 day above the 50-day and the action being contained above those shorter term moving averages is you do tend to want to let your winners run. So hopefully traders out there were patient with their winners in this pullback. Of course, you got to follow sell signals, but what the pullback allows for in a power trend is for these new setups, like you said, and for potential buyable bounces. It did seem like underneath the surface, there not only were there handles, but perhaps entries within handles, also some other aggressive entries. It seemed like there were a lot of actionable stocks out there today, Ed.
Yeah, and as people noted, I'm sure as we noted on Friday, things were there was a lot of leading stocks that acted well on that day. So that
Yeah,
was sort of like
reversals and that kind of thing.
yeah, foreshadowing. Leaders are outperforming the indexes, and the indexes look pretty good. So it's a power trend. It looks really good right now.
Okay. And you mentioned the S&P. That really did have that key test coming right down to the 200-day line, a pivotal level for market uptrends and downtrends. So what we wanted to see support hold there. It did on Friday. And now with this powerful bounce today, that definitely I feel like gives investors a little bit more confidence that we could see more room to run. Nvidia could have a lot to do with the market's reaction here over the next couple of days, potentially. But as of now, just technically speaking, it looks like we are in a solid position here.
Yeah, and it's oh so easy to say in hindsight, but it is actually a good thing to get that little bit of a test. It wouldn't have been the worst thing if we actually got a little more under it, and if we'd rebounded. I'm happy with how that was, but it's like to shake out below the some recent lows. We were starting to fill in the gap. Part of what's fun about a roller coaster is that you actually get that little bit of scare. As long as it doesn't get any more of that, you don't actually want to fly off the tracks. But when you get that moment, hey, and then everything's fine. Then it's fun again. So that's part of what it is, and so I think that was very useful. The S&P even more so than the Nasdaq because we definitely got that test.
Mhm. And, nothing's guaranteed, of course, and taking things day by day is what's important, Ed. But something else that comes to mind with these power trends and trending markets in general is something that O'Neill portfolio manager Charles Harris has previously said. And it's in those types of markets where you can trust the pullbacks. Of course, in real time, it's hard to
Yeah.
have that trust. Like you said, hindsight here, but as of now, support held where it should, and we got a solid bounce today. So we will take it. Another win for the Bulls.
Yeah, and this is one reason why we're talking about incremental. If you saw some of your gains from the follow through day be eaten up a little bit, but oh, it's okay. We're still holding support. But if you bought everything right at the high from like a
Right.
week ago, like I got to lighten up. That's really disturbing. So that's again
Mhm.
why sometimes being on one hand you're aggressive because you're getting into the market pretty early, but after a follow through day, and then doing it gradually but steadily, you can be pretty heavily invested, and then you can
Mhm.
withstand that kind of pullback without too much trouble. So it just all these things, all these rules can really work together to make it easier to succeed.
They sure can. And as a reminder for folks, we did get that follow through day for the major indexes on April 22nd. Moving on, quick thoughts on the Dow here, Ed, coming right up to the 200 day. Of course, this is less important from a technical perspective than the S&P 500 and the Nasdaq. But what do you make of the action?
Yeah, I mean, it's nice to see this coming back. It found support at the 21-day line. Yes, you want it back above the 200-day line, but now this is almost there. And I guess just to segue into the RSP, which is the S&P equal weight, that one vaulted back above. That's one looked a little bit like the Dow, finding support around the 21-day line. It's back above. This is nice to see because, okay, it's not just a handful of mega caps. It's not just some
Mhm.
techs. You're seeing everything sort of coming back up. Now the weak parts of the market aren't looking so weak,
Mhm.
is which is nice. And the Russell's still the weakest part, but that's the ne'er do well. It always seems to be just struggling away, but it had a strong day today.
Yeah. Let's talk about the bond market. What are we seeing with the yields here? Is that helping small caps at all the last couple of days?
I'm sure it is. I'm sure it's helping the market in general. We were at 4.63, a couple of days ago intraday, and we came back down to 4.43 now. So 20 basis points. That's a lot. Today there were some reports that maybe Japan might slow down debt issuance. It just might
Mm.
ease the pressure. So like less supply, so there'll be more demand and more. The demand will be there for long-term debt in general. But obviously coming down like that, definitely very helpful, because that's one reason why the market sold off. That was the biggest reason why the market sold
Right.
off, is the treasury yields surging like they did on Wednesday and carrying on a little bit on Thursday. So if that had kept on going, we wouldn't have had this bounce almost certainly, but we have. So yeah, very, very important to see that come down at least
Mhm.
off of those levels.
Yeah. And was it last Wednesday? There was a bad bond auction. Apparently, do we have more of that this week to be thinking about?
Boy, I haven't looked. There always seems to be a debt auction, and obviously that auction
Yeah.
came in the light of that debt downgrade, and so
Yeah.
yeah,
Sure. Sure.
that was really a test after that. So maybe they won't be as important, but you never know. Sometimes these auctions come and go. Whoa, I didn't realize that.
Okay. Well, we will definitely update our audience if there's any interesting things to disclose there. All right, moving on. Nvidia, big earnings report coming up tomorrow, Ed. Not only for this chip sector leader, but also it has a big weighting in the major indexes. And we do know that a lot of AI stocks tend to move with Nvidia. On what they say, for the future of this AI theme. And AI stocks have gotten back into gear over the last couple of weeks. So could be pretty interesting.
Yeah, I mean, when Trump tariff de-escalation and renewed optimism about AI spending, those are your two catalysts for why the market is up. I mean, you can talk about other things, but those are the two big ones. So this is one of them. I mean, and Nvidia is going to do that. It is interesting. The growth estimates have fallen quite a bit in the last week or so. I think as analysts have filtered in, they've priced in like a new chip ban that limited what Nvidia could sell. So they basically got $5 billion worth of chips they don't know what to do with. And so the growth rates are going to slow considerably for the quarter that's just about to report. But then we'll see after that. I
Mm,
mean, what kind of guidance can they give? They may not be able to give
yeah,
much going forward. I mean, there's so much going on that they may not want to say. But yes, so huge. Nvidia does have a handle on a weekly chart. You can see it wasn't a huge drop, but there was a drop. So if it got above that, it would be actionable. I would definitely note that after the last couple of earnings reports, things haven't necessarily worked out great. And they may have started okay, but then they quickly weakened. This last one, terrible. And the previous one, it got up to a new high and it did technically close higher, I think, that day, but was choppy and didn't really come back. It took a while
right,
to
it's kind of a dud.
kind of a dud, and then it flopped around, and then things got worse. But yeah, I mean, just Nvidia, $3 trillion stock. Broadcom and Taiwan Semi closely linked; those are $1 trillion stocks. So just those three stocks alone are $5 trillion, and you can add in so many other AI names, energy names, all sorts of things that are related. Just massive, just
Mhm.
influence on the market. So huge, hugely important for the whole rally.
Absolutely. So you do have this high from last week, around 137.40. That would be the handle type area where we would
Mhm.
want it to clear. And then 140 seems like a pretty key round number for the stock going back quite a ways, Ed. A
Yeah.
lot of the trading action over the last year has been under that 140 level. And I think the interesting thing about NVIDIA is a lot of traders still have it in this sort of leader category, but this is a stock that's underperformed the S&P 500 for almost the last year. So now that the momentum, it seems, or at least the outlook for the AI theme has improved a bit, I do think that it'll be a very important earnings reaction to follow. And the other thing too here, Ed, is it, as you mentioned with the chip bans, this is sort of at the intersection of trade war and AI. So I'm really looking forward to hearing what management says or doesn't say uh, on the call and how that influences investors. So
Yeah, and we'll have a
lots
live,
going
not
on.
myself, but IBD Live will have live coverage of the earnings and the earnings call. So you definitely want to be checking that out tomorrow evening.
Yes, we sure will be covering that. All right, let's now take a look at On. This is On Holding, the shoe company, and this was our stock of the day today, Ed, as it moved above a handle buy point.
Friday was a great shakeout because Friday not only had the news that, okay, there's more Trump tariffs, blah, 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 but there's also Deckers had a really negative reaction. They make the Hoka running shoes. So negative reaction there. So on really held up well considering those things. And it was a really nice shakeout ultimately. Wouldn't have been fun. I'm glad I would have been hard to deal with when you saw that open, but it turned out great. Today it did break out and it was actionable even before then as it broke the downtrend of that handle. In addition to that, in addition to the news, okay, the tariff news eased off. That wasn't directly important, but Trump also said over the weekend, yeah, I don't really want to reshore socks and T-shirts, which also suggests, you know, maybe shoes too. And On makes a lot of its shoes in Vietnam. It's like, well, that would lend itself. Well, maybe they won't,
Mm,
try to, that. I don't know. You can, but it sounds like it gives a positive vibe when you're thinking about the outlook for
yeah.
bringing back stuff. So this one's very volatile. It had a pretty sharp drop. It's come back. Obviously, tariffs are a huge factor. And another problem with this comp stock is that the earnings are lumpy. They're lumpy on a quarterly basis. They're lumpy on an annual basis. The revenue growth has been pretty strong, and there has been strong earnings growth. It's just it can be very lumpy on a back and forth. I mean,
Yeah.
there's
Look at this
currencies, there's other
earnings
things.
line. That is
Yeah,
not
that that
smooth.
that's the more I work out, but that's not how you actually want to, except maybe more sideways, but lumpy. And But it's still moving up. But that's just something to note. This one can have some really big drops along the
Mhm,
way. So that is something that investors should be careful
mhm.
about. But the relative strength line is at a new high, despite all the ups and downs in the last couple months.
Yeah, I mean, this is a really ugly base. Talk about a sell off, a depth of 46%. And usually our research shows that bases under 40%. Those are your ones that have a higher likelihood of success. However, for a lot of stocks and a lot of bases that we've seen formed over the last couple of months, you have to put that, of course, into context with what the broad market was doing, right? So we do have a lot of ugly bases out there, but a lot of powerful right sides of bases and some constructive bullish action in the last couple of weeks. So maybe making up a little bit for that base depth. So a breakout to watch, Ed.
Absolutely.
Okay, and let's take a look at Eat. This is Brinker International, the Chili's and Maggiano parent. A strong day of outperformance, up 6.9% above average volume here. Arguably actionable on Friday as it cleared uh, the last couple of weeks of trading action above 150, cleared a trend line here, Ed. And in your view, this is a standout in the retail sector. Tell us more.
Well, I mean, yeah, I was talking about this on IBD Live. Usually restaurants are really hot because when they're expanding, when they're opening a huge percent of their stores is expanding, like, oh, they're adding 20% more stores this year. And because that's where so much of the sales growth is, it's hard to generate that much more sales in a given restaurant. But this one really turned it around with Chili's. I mean, they really aren't, this is like, as it points out in this chart, 1,600 or so Chili's and Maggiano's, and they're going up 20 to 29. That's hardly any. I mean, that's really just a tiny increase. And yet their sales and their earnings growth has taken off. So that is a bit of a standout. You usually just don't see that. And really impressive growth for a couple years. Yes, it's supposed to slow down after this fiscal year in June, but still be a solid growth. So really impressive run last year, and it's still continuing for a little while. That downward trend line that you drew, that would made it auctionable. And intraday, it also had a short-term high right above 165 that it didn't quite close above, but that was the highest close in a while. So you could probably use it off of that. You could also to say, well, wait, I'm going to wait to see if it forms a handle or pauses here. I mean, you can do it, if you choose not to go off of that, but solid growth. You can see the accelerating revenue growth again without much in the way of store growth. Triple digit earnings growth. Yes, that will slow as the comparisons get much tougher, but yeah, really impressive. And there's a lot of restaurants that are doing well too. That's I think is consumer spending. It's interesting. You wouldn't think that consumers would be that really into how tariffs are coming in and out, all the news, because it's one thing to see the sticker prices, which hadn't really happened yet, but people do seem to be spending at restaurants once again after there were concerns that they weren't going to. There's a lot of
Mhm.
restaurants that are acting well right now.
Yeah, Shake Shack was another one that had a strong day today. We covered that in recent shows. What else was looking good today?
Bros, uh, there's there's a Cheesecake Factory actually, with another sit down restaurant. There's Darden Restaurants. I mean, some of these don't
Yeah,
have the same growth, but Darden broke out. So there's definitely a variety of restaurants that are
right.
doing well, which is a sign of consumer spending. And that was concerns about that, and
Mhm.
maybe it never really came off. People were just worried about it, uh, but the spending seems to still be happening at restaurants.
Yeah, great points, Ed. Okay, let's also check in on Octa earnings out after the close for this security software stock. And the security software group is one that we've seen rise in the industry group rankings in recent weeks, with names like CrowdStrike looking interesting, Rubrik, a leader in the group. And Okta has made a nice move in recent weeks, but earnings here, Ed, something that investors didn't like because the stock is down 11% after hours.
Yeah, it seemed like it beat views, and the next quarter guidance seemed to be good, or but I think they only reaffirmed full year guidance, and so that
Mm,
might have been the issue. I obviously haven't dug into it, but that's just a concern. It's like, well, if they've beaten Q1 and you're guiding up for Q2 and you're only reaffirming, that's sort of suggesting you're going to miss. Now, maybe they're
weakness,
just
yeah,
like, I don't know. I mean, I think that's it. It is interesting because sometimes companies just reaffirm and the stock takes off, and sometimes this happens. And so it's sometimes you can know the news and
yeah,
you still would be wrong. And this is I probably would have been wrong. It's they beat, they guided up, and then oh yeah, guidance way down the road. Who cares? But here we are, and we'll see how it is tomorrow. Maybe it'll fall down to,
yeah,
find support above the 50-day line. I don't know, but
mhm,
yeah, you just still have to watch out for it. Even when a stock is looking like a leader, even when it's in a leading group, earnings can be really treacherous, and it's just something to know. How much of a cushion do you have? How much exposure do you have to this stock or to the relatives? And that
Mhm.
really matters for Nvidia. If you have a whole
Yes.
bunch of stuff that's AI related, not just chips, but if you had energy stocks, if you had all these things that could happen, you could see a massive hit. It could have massive gains, but that's why it's like Nvidia is so important because so many stocks are going to move off of that.
Yeah. All right, Ed, a lot to look forward to as the week progresses. We appreciate it as always.
Thank you, Ali.
And thanks everyone for tuning in. That's it from us for today, but we will be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details. We will see you there. And then we'll also see you back here tomorrow after the close, along with at 5 p.m. Eastern on Wednesday, our weekly Investing with IBD podcast hosted by Justin Nielsen. This week's guest is Joe Fahmy of Zor Capital. He'll be talking about the signals he's looking at in the current market to guide him for how to be positioned. And you'll get some earnings reaction from the team about Nvidia after the close tomorrow. So that'll be really fun. Make sure you subscribe to our YouTube channel if you haven't already so you can get an alert when we go live. Thanks for tuning in. We'll see you back here tomorrow.